Whoa, whoa, whoa. You've got to go ahead and check out these 5 things you should avoid before buying your next home. What's going on, everybody? Ethan Reyes here, Real Expert Consulting, again with eXp Realty. I'm going to go ahead and share with you the 5 things you should avoid before buying your next home. Number 1, seems pretty obvious, but believe it or not, a lot of people kind of mess up across the country statistically with this one. Don't quit your job. Banks want to see stability, and especially if you're financing. If you're buying cash, yeah, you have some flexibility, but whether or not you're going into another business or have another job lined up, that's up to you. But definitely, if you're financing, don't quit or change your job during the process. Number 2, please avoid, by all means, checking your credit, and I'm talking about running your credit, not the regular, any credit reporting sites that you probably subscribe for, but any credit check where it's gonna be a hard pull, keep away from it, as well as any opening of credit cards. Stay away from Macy's, Bloomingdale's, at least for the time being, all right? That was a shameless plug, I didn't mean it. And 3, this may sound a little mean, but it's the truth. Sometimes family and friends may have to lean on you because they're trying to make an acquisition or purchase and might not have the credit. By no means co-sign on the next purchase of somebody else's that you might know, no matter the feelings you hurt. I'm sorry, but it's true. Number 4, please, by all means, try to be as accurate and truthful when you are filing your application with the lender so that they can better, clearly qualify you and give you the exact roadmap to how you can purchase your next home. And number 5, don't make any large purchases on a finance, especially during this process. What banks want to do is compare your debt to income ratio. What that is simply they're comparing the amount of money coming in and the amount of money going out, and especially when it is an open revolving debt or just a big hanging balance. Luckily for you, and luckily for many of us, student loans, it has me up here, right? Doesn't really factor against you in terms of the weight, especially if they're deferred. However, a large personal loan definitely will drive up that debt to income ratio. I know I said 5 things that you should completely avoid, but I've got one bonus one. Please account for closing costs. Aside from your accumulated down payment, whether it's gifts, you beg, borrow, and stole for it, whatever. However, you should account for 3 to 4% of the purchase price in terms of closing. It may be definitely less, but more than likely not more than 4% in any market. And what this covers is you're preparing for bank fees, attorney fees, appraisal. It's overarching variety of things. And it's better to be safe than sorry, I always say, but always check with your lending institution to see how they can help offset those costs. Listen, I know people, so give me a call. That's what Real Expert Advising is about. This is Ethan Reyes, once again, Real Expert Consulting with eXp Realty. If this video offered you any value whatsoever, please like, share, comment, definitely subscribe, but most of all, be well.